Holy smokes, what a day, what a move, what a squeeze. Boy, oh boy, we talked about this last night. We thought there might be some money to make with some bear traps on a deep pullback, but I don't think anybody expected to get what a squeeze here today. Man, oh man, now you know why I said last night, if we start to accelerate off the moving average, what were the best entries? They were traps, right? They were the only entries on the way up today. So now you know why I say traps are best whenever we accelerate. Hope you made some money out there today. Hope everyone had a great day out there, but it's back to work tonight. We got more work to do for tomorrow. Remember what I said last night? I don't care how much money you made today. We got to reset, refocus. We got Friday right around the corner. We had some really big moves on the charts today, and that usually means some big opportunities, especially with that big short squeeze going into the end of the month volatility tomorrow. I have a lot of great trades on my radar for tomorrow. I'm going to cover all my favorite setups in the video here tonight. That we have a game plan to make some money on Friday, end of the month Friday. Before we jump in and get our hands dirty on these charts tonight, make sure you subscribe to our channel. That way you don't miss tomorrow night's video. And if you enjoy this stuff, if you enjoy this video tonight, hit that like button and do me a favor. Give me a shout out, give me a holler in the comments section down there. Appreciate you guys tuning in, supporting this YouTube channel. But enough of the intro. Friday is not going to trade itself. And we've got some more big news coming here for tomorrow as well. The end of the month, it must be end of the month right now. Big moves we saw today on the Emini, S&P, and the NASDAQ. We have big moves into overhead resistance. Anytime I see a move this size, there are ultimately three different scenarios I'm watching for tomorrow. And so tonight we're going to talk about those three different scenarios to pick the perfect entries after a big short squeeze. Oil is range bound right now. Bear market into a trading range. Boy, speaking of short squeeze, I would love to get a fake out breakout off of that low. If you're a student of mine, we have some really nice 1, 2, 3 move levels down here. I would love to get a fake out breakout off that low. We're still waiting for that breakout pullback from earlier this week, so I definitely would like some bear traps on the way up and then possibly a dump back down again. So there's quite a bit to look for tomorrow on oil. We've got some big earnings tomorrow on oil too, so that might be the fuel, if I can use a bit of an oil joke, right? Maybe fuel we need for some oil moves tomorrow. So we'll talk about oil. We got a lot to talk about in another very important video here tonight. Now, talking about tomorrow, before we jump in and talk about my favorite trades for Friday, we've got some big news tomorrow. Specifically, well, don't forget, tomorrow is end of the month. End of the month, the scarcity starts to creep into the markets, and scarcity usually means more volatility. It's been a wild week so far, so we might see some increased volatility into the end of the month tomorrow. Don't sleep on this personal income number tomorrow. It is well known this is one of the most watched inflation numbers for the Fed, and of course we have the FOMC announcement, possibly one of the biggest FOMC announcements of the last year and a half, right? We're getting towards the end of the tightening cycle. Bottom line is you got to think that tomorrow could be a nice shot in the arm for these markets. And then, those consumer sentiment numbers on Friday at 10 o'clock Eastern time, they seem to have a knack of surprising people. And so you definitely, if you could only be at your desk tomorrow for an hour or so, that maybe that 9 o'clock to 10 o'clock, 9 to 9:30, 9:30 to 10:30 block right there. Get the personal income number out of the way. And we oftentimes see some nice big moves off that 10 o'clock news. Also, too, don't forget, tomorrow is a Friday. My mindset on a Friday is get me in early to something, leave a position to run. You got to have a good reason to be putting more risk on towards the end of the morning, the end, early afternoon, because price gets thin. Again, end of the month, craziness sets in. So tomorrow, the goal is get into something early, right? Leave something to run, because Fridays they love to move right on that low volume. Now, we do have some earnings reports tomorrow morning. Let's not forget about that. We are well past the peak of earnings this week. We've only got the Apple earnings coming out next week. I think Tuesday, Wednesday next week. We'll talk about that next week. Tomorrow though, it's all about energy, right? Exxon, Mobil, Chevron, of course. That'll happen in the pre-market tomorrow. And then, of course, oil opens up at 9 o'clock Eastern time. So there could definitely be some fireworks around the oil markets tomorrow. I hope we can get the little fake out breakout at the low. Next week, though, we get the final week of earnings season. We get FOMC next week. So don't you go disappearing next week. We'll have more to talk about for earnings next week. So personal income at 8:30, consumer sentiment at 10 o'clock. Remember, early in, get in early, leave those runners. And boy, it should be another great day tomorrow morning in the markets. We always seem to find some good trades on Friday mornings. At the end of the month is a cherry on top. Now, back to our charts. The money is made on the charts, right? It's good to know when the news is. But we're going to trade the reaction, of course, with these setups. Now, if you like making money, make sure you watch all the way through this video tonight, because every trade I talk about can be applied to your favorite market. We'll go S&P, we'll go NASDAQ, we'll go crude oil. And you know me, I'm going to tie them all together tonight. That way it'll be worth it to watch it all the way to the end. Before we jump in, don't forget, these are all tick charts here tonight. This is the 21 EMA. That's the moving average on the chart. And as always, I do like to incorporate or include, linked up in the description, I've got some 60-minute charts, some 4-hour charts. I like to use those higher time frame charts as more of a directional filter, give me a bigger picture, helps me identify the best trades each day. So if you want another way to look at the markets, grab those links linked up in the description of the video. Now that you know what you're looking at, what's the most important factor right now on the S&P? Really, the S&P and the NASDAQ. The most important factor is the sheer size and strength of this move going higher. This is a very simple idea. Anytime we have a strong move in one direction, we expect a pullback and a retest of the high, right? Very, very simple. Anytime we see a strong move, we expect buyers are going to want to buy the dip and retest the high. Now, this is a relatively big move. And so we have to think that buyers, they may not totally love the idea of buying way up here. And so oftentimes these big moves, they result in really deep pullbacks because buyers, right? They want to buy low. Now, one more wrinkle about big moves. Sometimes, in end of the month, after a wild earnings week, sometimes a really big move like this, sometimes the buyers aren't willing to take profit. Sometimes the sellers they don't dare sell this thing right now. And sometimes we'll chop around and go sideways. Okay. Ranges are very, very common after a really, really big move. So ultimately, usually what happens is we'll get that deep pullback and we'll start settling into some sort of range up here. So you're probably going to see some sort of range. By the end of the day tomorrow, we're probably going to see that range forming up there. So keep that in mind. So we know we're bullish. We know we should be looking for a pullback, right, for buyers to buy low right now. I'm going to go out and find some support levels, right? Support levels. One of my favorite support levels in a big move like this or a reversal like this is to look at that last big gasp going lower and create this measured pullback. Okay, see what happens, right? It's a bear market going lower, then it spits up. This is kind of sneaky, right? You can use that last that last gasp, right, from the bears and use that to project down and give me some support. I've also got marked off the high, marked off the low, that support area, mark off the high, mark off low. So anyways, lots of support levels on the chart right now. If I had it my way tomorrow, we get a nice deep pullback. We'd use something like my failure pattern, right, and trap in some bears who are thinking it's a reversal and go right back up to retest the high. That would kind of be the dream scenario, right, for tomorrow. Now, the dream scenario doesn't always happen, right? And on these videos, I like to game plan different scenarios. There are really 3 different variations of this setup that I want to make sure you're ready for, because we may not get that dream scenario, right? I would love to get it. And by the way, one of the most common questions I'm going to get tonight is, if we're expecting a pullback, can I short this thing? You can, but I'm going to talk about the difficulty in that a bit later on in the video, right? There probably is some money to make shorting this thing on the pullback, right? If we expect a pullback, then can we short it? You can, but I'm going to talk about that a bit later on because we have to kind of be aware of some things beforehand, all right? So keeping that all in mind, the three most common kind of setups you're looking for right now is, first one is the ideal, right? The ideal one is to get that nice deep pullback, get underneath the moving average, and just like I talk about in the free trading course, whenever I have a bull market, the easiest money you can make in a bull market like this, because we know they want to go back and retest the high, the easy way to do this is to let the sellers try a couple times, basically trap them underneath the moving average, and then use their stops as fuel, right? We call these failure patterns, right, in our free trading course. So I want to get that nice deep pullback, and the deep pullbacks oftentimes on a faster time frame, right, on an entry time frame, it'll look really, really scary, right? It'll be very bearish. So we give the bears a couple shots, let them kind of wrap that noose around their neck, if I can use a kind of a metaphor there, and then buy right into those stops. Now, after we get that stop run, okay, if we get that stop run, what oftentimes happens is we start slamming higher. It can be very tempting to chase this thing going higher. What did we talk about last night on the video and repeatedly on these videos? I don't want to buy high, right? I want to buy low. So what's the best entry pattern to buy as low as possible? It's a trap setup, right? And again, like I mentioned earlier, traps were kind of the only way, right, to get in, right, on these entries here today. We're all traps. So think about this now. Deep pullback. Trap in the sellers, right? Kind of, in a way of speaking, trap the sellers below moving average, use their stops with a failure pattern. And then as we start to punch up and go higher, now everybody kicks into FOMO. Everybody wants in. So you want to buy as low as you can to finish off that move right off the high. That failure into trap pattern, just like we have hundreds of examples of these in that free trading course, right? Which reminds me, I know that most of you guys are taking the free courses or you've taken it already and learned these setups. But if you're watching for the first time right now, if you haven't taken that free video series yet, I'll put a link up there for you in the upper right-hand corner. Grab that link, take the free trading course, because the strategy you'll learn in that short video series will teach you a simple trick to know exactly where the best winning trades are going to be that day. And I'll teach you my 4 favorite entry patterns to help you start making money on your own out there. If you're missing the best trades each day, if you're missing those traps on the way higher today, you definitely want to grab that link, take that free course, and you'll learn all about deep pullbacks, using the moving average to trap in, and then grabbing it on the way back up to retest the high. So that is the dream come true scenario. Now let's talk about some variations of this. Okay, what if we don't get that deep pullback? Okay, what if we don't? Maybe all we get is, you saw earlier I had that channel drawn like that, right? So what if we don't? What if all we get is a relatively shallow pullback? Can I buy a shallow pullback? I can, but what is the challenge? The challenge is I'm buying relatively high. Now, we just talked about this. What is the best entry setup if I'm being forced to buy relatively high? It is a trap setup. So what you want to do is you want to think about bears trying a couple times, and you want to buy as low as you possibly can. Okay, this is where a 2-try failure with a trap entry, if you're one of my students, we call these crown reversal patterns, right? Now, notice how I draw this, okay? Because this is very, very important. Notice how it's 1 try for the bears. Remember, at this point, we're expecting a retest the high, okay? We're not getting a deep pullback where we assume a lot of the pros are waiting, right? The big money is waiting to load the boat down here, okay? So if we don't have that big money in this area, we need to get some sellers roped in so we can squeeze them out to give us the fuel we need to go back to retest the high, right? This is why understanding market context, the size of that move, is a big part of this, okay? So bears come in, try once. Remember, sellers want to sell high. Okay, we talk about this all the time in our trade room each morning. Bears try once, go to a higher high, and try again. Remember, as it goes higher, more sellers are looking to short this thing, right, going down again. And I will talk about how to qualify that short a bit later on in the video. As those bears pile on, now a big, juicy green signal candle. You guys learn about signal candles in the free video course, right? Imagine you're short now and you see a nice juicy green candle closing firmly above the 21 moving average. What are you going to do? At no, right? You're going to close that position, get me out, right? And that's what oftentimes causes these to snap right back up to retest the high. Now, I talked about earlier how a range might form up here. Okay, these are very common if we start seeing a range up here overnight, right? Because ranges act like magnets, right? So if we start going sideways in a range, we may not get that deep pullback because sometimes those ranges are simply too strong of magnets, right? This is a very, very common entry setup. If we're chopping around going sideways up there, it might be difficult to get that dream, that dream come true pullback that we want, okay? That is the second way that we can time the perfect entry after this short squeeze. What's the third one? The third one is probably the most challenging out of them all because it really hits our emotions. It's difficult on our psychology. Let's say, for example, we open up overnight here, and of course, nobody knows what's going to happen here in the next few hours. We heard from Amazon. Amazon, of course, crushed their earnings reports or their earnings estimates here for today. Let's say we get a strong shot lower. Okay, this is the third scenario we'll be aware of. A strong shot lower, but now we don't get the bears coming in, right? We don't get the ability to hamstring those bears and light those stops up, right? You know what I mean? We don't get that ability now. What happens now is there's so many buyers down here that oftentimes the market will just V-bottom, right? And begin to race back up to retest the high. This is why I say this one's more difficult because of our emotions, right? It'll oftentimes slam lower and you're like, shoot, should I sell this thing? And it slams back up and you're like, crap, I'm going to miss the end, right? So that little shake and bake, that head fake is very, very difficult to resist. That's why I go over these before we trade the following day so you're ready for this. What will oftentimes happen, what most of the time will happen is it'll pop back up and begin to grind going higher, okay? That is your giveaway right there. If it pops and begins to grind, now we don't want to buy high, right? We want to buy as low as we can. How do we do that? We go looking for traps. Now, this is an easy one, okay? This is an easy one. Watch closely. You draw a trend line off the highs, right? You bring it down to that low. Does that make sense, right? Because all you know at that point is these highs. Okay, so you draw it right off that high, and you bring it down to that low, and then what do we always say? Look left, find some prior swings, and go looking for traps off the low of that channel. Okay? It's very, very important. The channel is not the most important part of this. The most important part is we want to get those bears to come in and try to short this thing, because again, we're going to need them to get trapped to get this thing to run. Does that make sense? Okay, so that we call that the V bottom, right? The V bottom into my favorite dance move, right? We call the pop and grind. I laugh because we joke around about this stuff in the trade room, right? So pops up, grinds higher, right? And then you've got that channel coming in for that retest of the high. All right, guys? Now, how do we short this thing? Okay, how do we short this thing? Can I sell this thing back down? And what if it keeps going? Oh, and by the way, what if we double top? Can I short that too? That's a really good question, right? I definitely think there's possibility on that for both of these markets, especially the NASDAQ. Let's talk about this on the NASDAQ right now. NASDAQ is very, very similar to the S&P, but the one big difference about the NASDAQ is we are sitting at major, major resistance. And you'll see this on the 60-minute chart, the 4-hour chart. I linked up the description. That's why I put them in there for you so you guys can see that stuff, right? So I get a lot of questions about this stuff. If we are anticipating a deep pullback, how could I sell it? The key to selling short in a market like this is to, first of all, get the idea out of your head that we've gone too far. Okay, the easiest way to lose all your money, the easiest way to go broke as a new trader is to say to yourself, oh, we've gone way too far. We're due for a pullback. Due for a pullback is on the headstone of every bankrupt trader, right? We're not due for anything. Okay, so if your idea right now is I'm going to sell this thing because we're due for a pullback, I don't care what divergence signal you're watching or what MACD cross you're looking at or what other indicator, I don't care, right? These types of markets, they can keep on grinding. What's the old saying? They can stay irrational longer than you can stay solvent. So right off the bat, if you're trying to pick a top on these, be very careful. Okay, what I tell my students a lot is these are half-size positions. These are quarter-size positions. Okay, if you are trading only one or two contracts, these are no positions, right? If you're a very small account, I would recommend, personally, it was me, right? I would wait for the better trades. Those are a faster way to grow your account. Now, with that disclaimer, right? With that disclaimer, again, markets are not due for anything, right? This could easily keep on grinding higher until we get that deep pullback. And while you're trying to chip away at this, right, you're going broke. By the time you wave the white flag, that's when it dumps, right? These are very difficult sometimes. Anyways, okay, I'm on my soapbox now. How do we short this thing back down? The way that you short this is you have to use that crown reversal pattern. Okay, there really are two ways to short this. One is a crown reversal pattern. Now, we talk about this all the time. How is my location and how is my momentum? Okay, location's great, right? We're at a great big area of resistance. It's been a big move up today. It's probably ripe for a pullback, absolutely. But again, when that pullback happens, I couldn't tell you, right? So we know location is great. Momentum is the problem. Everything is easier. Everything is easier when you go with the momentum of the market. So if I don't have momentum on my side right now, I need something else to help this market go lower, right? And what that is we need a stop run, right? We need to trap in some of these buyers and get that classic 3 steps to call a top, right? What are 3 steps to call a top? 1 is a major turning point. Right? You want to pick a reversal. 1, make sure at a major turning point. 2, you want signs of exhaustion, right? Signs of exhaustion, the 2-try rule, right? So buyers try once, go lower, buyers try twice. Now remember, watch this closely, right? There's buyers waiting to get in as we go lower. I have to get as many of those buyers into this move as I possibly can because I'm going to need their stops to light the fuse going lower, right? This is why the lower low is so important, especially on a reversal, okay? So it's a very important part of it. And then if I have a very bull market right now, I expect what? I expect there to be buyers waiting down here. Okay, if I expect buyers waiting down here to buy it back up, that means I have to sell as high as I possibly can to build some profit into that trade so I don't get smoked right on the way back up. This is why a crown reversal or a bull trap is really the only way to sell in a move like this, right? Because again, this could easily keep going higher. It could also go sideways here and chop you up. Okay, makes sense? So as we start pulling back, the buyers come in, they try once, they go lower, they try again. Now, the most dangerous thing you can do is sort of sell right here. Okay, when I was a rookie, the reason why I know this is because I made these mistakes, 15 years ago doing this stuff, right? I say, oh, we're going to pull back. I'm going to sell, right? Okay. The idea is I'm going to sell right into stops, right? Stops are right there. I'm going to sell right there. The problem though is that now you're selling low. You're selling right into where buyers are going to be waiting in a move like this, right? Remember, context is king in this situation, or queen, right? So you want to sell there, you got to wait for it, right? You want to wait for it and sell as high as you can, right? Get that short like that. Because now, when we get down into this area now where we anticipate more buyers are coming in, you've already got your first target. You've already got that risk off on that trade. If it keeps going, bam, right? You're making bank. But if it doesn't and it rips higher, at least you're stopped out with a scratch or a small profit rather than getting your whole face ripped off, right? And becoming the trap, right? Becoming the fuel these buyers are using. Okay, does that make sense, right? So the crown reversal, right? The crown reversal is where you want to look for that short going lower, okay? Now, one more scenario. Makes sense? If you get any questions, right, hit me up in the comments section, and I'll try to cover those as best I can. We'll do this together, of course, in the trade room, right? Now, let's pull back, right? We pull back. The bears get trapped in down here. We slam back up, right, to retest the high. Now, here is the second chance to sell off the high, okay? These are going to be a lot more reliable because now the buyers who got in down here, their juice is squeezed now, right? They're all taking their profit up here now, right? When you're trying to pick a top like this, you're fighting the idea that as you go lower, the buyers are waiting down there, right? That's why you got to get that trap. That's what's a very specific short off the high. Once we retest the high, now the buyers, they're already in. They already got their money, right? They're kicking their feet back now. They're all fat and paid now. Now what we can do is go in and now look for that double top, right? And this is the way it looks like right here. So we pull back, we trap in, we back to the high, right? I'm not going to go over that again. Trap back in the high right now. Who is buying up here? Remember the buyer, right? The pros, the smart money, right? They're loading the boat, right? As it goes lower, cashing a big paycheck back up to retest the high, right? Now, these are rookies coming in now. Right? So now you basically have this distance right there to work with. Okay? Because you can expect that below these lows are who? Mass buyers, right? More buyers are waiting down there. I know. I live in Los Angeles, right? So more buyers are waiting down there. Make sense? Okay? So as we go off these highs here, into the highs, rookies come in, and this is where a simple two-try failure. Now, keep in mind on this, you want this pattern, right? You want to make sure this is where risk reward comes in handy. And we talk a lot about this in the morning trade room. It's a bit advanced, right? You want to think about how is my risk and how is my reward back to that level. Okay? The larger this pattern gets, right? The larger this pattern gets, the more you have to look for that trap. Does that make sense? Right? Because now you've got to keep that risk to reward ratio in line. Okay? So it's a somewhat simple idea, right? If I can get into these highs, take out the highs, rookies come in and try a couple times. If I've got a stop run right there, this is a great trade, right? Because I've got a small amount of risk for a much bigger amount of reward. We know where the market wants to go at that point. But however, if we come up here though, and we get buyers trying once, buyers trying, something like this, right? Like that, what do you do now? You don't just blindly go, oh, there's one, there's two, sell it. No, because now risk here, reward there, right? This is we have flipped that now into a trap. I think this makes sense, right? It makes sense, right? It's all about risk reward on the way down. I've got to get high enough, right? Get two tries, right? To trap those buyers in, use those stop losses. I have to get high enough at the ladder there in order for me to get my risk-reward ratio to make sense, because when your risk-reward ratio makes sense, you're trading in line with the bigger money in the market, right? The bigger money, they've got 30 plus years of experience. They know what they're doing. They're going to help that trade work for you. All right, guys? And also, too, don't forget, sometimes we'll pull back, we'll retest that high, and we'll keep on going. Right? We'll keep on going, right? Sometimes what will happen is they'll pull back, they'll retest that high, and they're like, no, we're not done yet, right? We're going to hold that pullback and jump and run higher. And if that's the case, what do we call these? We call these 1, 2, 3 breakouts. In that situation, we mark off that high, we mark off that low, we go looking left, and just like today, when the market begins to accelerate, what do? You grab those traps. As you can see, I love traps, right? They're my favorite setup out of all of them. We cover a lot of those deeper in that free trading course, all right? So be aware, like I said, of trying to call those tops in these markets, right? They are, again, there's no guarantee this thing pulls back here just yet, right? So be careful on that. The next scenario, the move to the oil here, the next scenario is, hey, let's say we get a complete reversal, right? Let's say we roll lower. Now the bears come in, right? They don't try once, twice, and back up. Now what do? They hold and they accelerate. What did we learn today? And again, this is a slow time frame, right? On the faster time frame, what did we learn today? If it starts to accelerate and run, what do? You go focused on traps, right? Because that's oftentimes the only entry you're going to get. This seems to be a little bit, relatively not impossible, but improbable for tomorrow, right? Having a whole squeeze like that completely get reversed doesn't seem very likely tomorrow, but that's the game plan, right? If they hold and they jump off that moving average, we start to run and race lower. It's all about traps. It's a race until you get back to that low a day, right? Back to that low. Again, not impossible. Doesn't seem very likely though right now. What seems most likely is that pullback, that retest the high, and some sort of range developing here overnight. All right, guys? Very, very interesting chart here, and hopefully that made sense as far as trying to short these things off the high. Let's wrap things up here now on the crude oil. Oil, we are obviously very bearish right now. Oil still pretty bearish on the 60-minute chart as well. We have a trading range on the chart. And I'll tell you, when you go into that 4-hour and that 60-minute time frame chart, you will see we have just a plethora of support down here. If you're a student of mine, we have what's called a 1, 2, 3 move down here, which is oftentimes a great reversal setup that we talk about in our morning trade room. That is a big reason why I said earlier that one of my favorite trades for tomorrow, I think my favorite trade on oil right now is a head fake off that low, right, and trigger that squeeze back up again. That is something I'm watching here, because if you understand ranges act like magnets, right? So again, we're pretty bearish, right? So we have to be careful trying to buy down there, trap those bears in. But remember, we haven't pulled back, and this will be easier on the 60-minute chart, I think. We haven't pulled back, right, to the base of that trading range, right? We had that little guy right there, but on the 60-minute chart, you'll see, right? We're probably still due for, well, again, due is not the right word. We probably still have a likelihood of a pullback there. Let the bears come back in and sell it back down again, right? So that's what I'm trying to get in on, right? I'm trying to kind of find the entry on that move here before that breakout pullback. So let's kind of go over a couple of these, and I won't be as long-winded on this one, I promise. On the oil, that last one went a little bit longer. I do understand that. So if we go lower here, right? If we go lower here, the two scenarios you're watching for, one is that short squeeze, right? Is trapping the bears in. Remember, you're going to need those bears trapped in, bears once, bears twice, higher highs, right? Let them get short and then use their stops as fuel with a 2-try failure to snap back up into that trading range. Now, if we can get a good acceleration, right, back up into that trading range, where do you think the market wants to go? It's going to want to go up and take out that high right there, right? That is the objective. That is number one, the objective. So if I can get into something off of a trap, this of course is very similar to what we talked about earlier on the S&P, right? This is nothing more than that same deep pullback scenario we mentioned on the S&P, right? Trap the bears in below the moving average, get that failure there to kick this thing into gear, and then again, as we go higher, look for that bear trap. You got to remember, trend line overhead, right? Resistance overhead. So you want to think about that bear trap there, right, as the add-on before we get back up and take out these highs, right? Those would be some very attractive setups here for the buyers, kind of leveraging the fact that support levels below this trading ranges act like magnets. Now, we have to be aware that we're still pretty much bearish overall, right? So if we were to really crush it and run lower, we then start thinking about that breakout pullback again, right? If we really get a strong run going lower, which could easily happen tomorrow, my favorite trade means nothing to these markets. They don't give a crap about me, right? They'll do whatever the heck they want. So if we just crush it going lower, then we start thinking about a bigger channel off the low, off the high, right? Moving average comes down, and we're trying to get that pull back, trap the buyers in above the moving average, and retest that low, right? So if it really, really rips going lower, we get some big earnings tomorrow, right? So if it really rips going lower here, strong move down, the key will be this range becomes an area of resistance now. So the key will be just not chasing going lower, trying to go out and find a larger channel, and then incorporating things like a failure pattern, right, off the moving average, a pullback combination, right? We talk a lot about pullback combos in the free trading course, and a retest of that low. Right? Then from there, we could look at a reversal, right? Bears once, bears twice, and the squeeze back up. Where are they trying to go? To that high right there. Okay? So keep those two scenarios in mind if we end up going lower. If we end up going higher, this is a classic case of we have a very small window of opportunity up here. So if we do end up going higher here, the name of the game for buyers is bear traps. because we have to buy as low as we possibly can. And then be aware, once we start getting up here, right, do we accelerate? And if we do, the odds are pretty good for a new channel and a long off the low of that channel, right? Could be a trap, could be a failure, could be a pullback, right? You know what I mean? So if we accelerate off that trap and really start to kick into gear back to 77-ish, 77, 8, right, 78 area, then pullbacks off that channel become realistic. What seems more likely, though, is that run back up into area of resistance and we start pulling back the buyers once, the buyers twice. Because, again, this is the underbelly of that trading range, bull trap, right, and that short back down into that trading range, okay? So, again, a lot of similarities here. We've talked about this scenario a few times already this week, right? As we get that pullback, as the market begins to pull back and accelerate going higher, it's that bear trap off the low. And then once we start getting up into these overhead resistance, unless it, unless it really accelerates, right, and begins to really grind going higher, be on the lookout here for that pullback failing, right, twice and stops getting lit up and then right back down into that new trading range, which again will usually act like a magnet. All right, that's what's on my radar for tomorrow. We've got some really big news tomorrow, right, for the oil, for all the energy companies, right, tomorrow. ExxonMobil and Chevron reporting tomorrow. So it very much is a wait and see here on the oil. But now at least you know where my mind's at. Remember, speaking of mindset, Friday morning tomorrow, not early out, but early in, right? Early in, get risk off quickly, take some small profit. My mindset is always get in early, leave a runner. And sometimes those Friday afternoons, they just keep on going and going and going. Now, keep an eye out for ranges tomorrow morning. Don't forget that inflation number at 8:30 Eastern time. And man, oh man, excited. What a great week it's been. We got more stuff coming next week too. So don't miss next week's video newsletter. Don't forget, I'll put all the free course links, all the membership links, all the higher time frame links down in the description of the video. If you need any help getting into anything, the free classes, the membership classes, don't be afraid to call the office or use live chat in the lower right-hand corner there. I am here to help out if you guys need help along the way. On that note, I will wrap things up here tonight. Rest my voice. I'm sure you're tired of hearing my voice all week. It's been a great week. Guys, thanks for watching. My name is Joseph. Be well out there. Be nice to each other, especially this weekend. And be here next time. Adios, amigos. Bye-bye for now.